I am Renuka Devi. Today I am going to discuss about the fundamental analysis in stock market. Fundamental analysis, it measures a security intrinsic value by examining the related economic and financial factors. It is the value of an investment based on the issuing company's financial situation and current market and also the economic condition. It also deals with the fundamental analysis, study anything that makes some of the activities making the intrinsic value of the from macroeconomic factors such as the state of the economy and industry condition to microeconomic factors like effectiveness of the company's management. The end goal is to determine a number of an investor can compare with the security's current price to see whether the security is undervalued or overvalued by other investors. So, making the fundamental analysis is a method of determining a stock real or fair market value. Is nothing but the fundamental analysis search for stock currently trading at the price either the higher or the lower than their real value. So, in the fair market value is higher than the market price, the stock is said to be undervalued and a buy recommendation is given. And if the market value is lower than the market price, the stock is said to be as a overvalued. So the main recommendation might be not to buy or to sell if the stock is withheld. And in contrast, technical analysis should be favor studying the historical price trends of the stock to predict short term and also the future trends. So when we are going to under the fundamental analysis concept, what we have to understand, it is usually done from a macro to micro respective to identify the securities that are not correctly priced by the market. So under the analysis, they typically study in order to make the overall state of economy, the strength of the specific industry, the financial performance of a company issuing the stock. So what are the sources for the fundamental analysis? So it uses publicly available financial data to evaluate the value of an investment. The data is recorded on financial statements such as some quality and quarterly and annual reports and filing like the some activities. It also informative because public companies must file it any time at a reportable event occurs. And also the intrinsic value, when we are supposed to talking about the fundamental analysis, the company uses the company revenue, earnings, future growth, return on equity, profit margin and other data to determine a company's underlying value and potential for future growth. Once upon the primary assumption behind the fundamental analysis is that a stock's current price often does not fully reflect the value of the company and also the when compared to publicly available financial data. So a second assumption is that the value reflected from the company's fundamental data is more likely to be closer to the true value of the stock. So for example, the company, the stock was trading at the $20 and after expensive research on the company, an analyst determined that it ought to be worth $24. So another analyst does equal research but decided it should be worth $26. So many investors will consider the average of these estimates and also assumes that the stock's intrinsic value may be near the $25. So often investors consider these level of the estimates highly relevant because they want to buy stock trading at the price significantly below these intrinsic value. So it leads to a third major assumption of a fundamental analysis in the long run. The stock market will reflect the fundamentals. The problem is no one knows how long the long run really it is making. So it could be days or years, it depending upon the fundamental analysis. So this is what we have to talking about the fundamental analysis. By focusing on a particular business, an investor can estimate the intrinsic value of the firm and find opportunities to buy at a discount or sell at a premium. So the investment will pay off when the market catches up to the fundamentals.